Okay. Okay, 1 minute culture recording start. 602 now, no? Okay. Any disturbance is there from your side? Sridhar?
No, sir.
Some background noise.
No, there's no background noise in the room. I'm locked completely.
Oh.
Yeah.
Atla, we can start the recording and we can start, yeah. PVS, can we start?
Yes, sir. We'll start now. Good evening, participants. IEEE CS Madras, ACM Chennai, and CSA Chennai chapters cordially invite you to the webinar on Demystifying Payment System by Mr. Sridhar Pandurangiah, founder and CEO, Sastra Technologies. This webinar will introduce the participants to Fintech and payment systems covering various types of credit cards, magnetic swipe, chip, and near-field communication, acquiring process, payments and chargebacks, switches like Base24. Participants will be exposed to various messaging formats and schema in ISO 8583, trade finance, payments, and SWIFT format and schemas like the MTCs of messaging. Participants will also be introduced to the new age payment infrastructure like RTGS, NEFT, IMPS, UPI, and payment gateways like AirPay, RazorPay, PayPal, Paytm, PayU, Worldline, etc., along with code walkthrough with demonstrations for payment gateway. The webinar will also introduce participants to P2P lending and cryptocurrency. Participants will then be given a list of resources and call to actions that can help them amplify their career prospects. Mr. Sridhar is the founder and Chief Technology Officer of Sastra Technologies and the architect for AnyBank's platform. His current work focus is on scaling the AnyBank platform and the suite of products which involves 12-factor apps, business process management, enterprise integration patterns, containerization, Docker, and Kubernetes, continuous integration, continuous delivery, DevOps, microservices, and service mesh. Mr. Sridhar enjoys mentoring, coding, provisioning, and helping developers to be successful while building applications using open source technologies. Over to Mr. Sridhar. Thank you.
Thank you, sir. Am I audible? Just one confirmation before we start.
Yes, sir. You're audible.
Yeah, thank you very much once again, sir. In fact, this presentation is an introduction to payment systems, and I'll try and cover as much as possible. And if you have any questions, my request is to keep them at the very end till we get to the question and answer sessions. In fact, this presentation deck is a small portion of a much larger deck for Fintech, and it is a small portion of my 30 years of experience in building Fintech systems. I hope you like what you see. So with that, let me go to the first slide. So what is financial technology? Okay, that's the first thing we need to address. Financial technology is the coming together of technology and finance. Just like we have the word avionics, which is nothing but electronics in aviation. So financial technology is technology enabling the process of processing money or anything related to money as a product. Same thing, you have biotech, you have so many other tech, you have reg tech, which is a regulation technology, and so on and so forth. So today we'll be covering a brief of payment system, which is a small portion of financial technology. So what is the landscape of financial technology? Yeah, technology can play a very important role in lending and deposits, wherein you can, where banks give out or financial institutions give out corporate and retail loans. It can play a very important role in wealth management. Things like equity and debt portfolios, where a portfolio is created for the wealthy or high net worth individuals, and there is a mechanism in which the asset allocation is done between equity and debt, and you can even micromanage by suggesting which stocks to invest and so on and so forth. Technology plays a very large, very important role in crowdfunding. There are crowdfunding platforms where you can fund projects or companies, and sometimes you can even fund charity causes. Then we have payments, wherein technology plays a very important role both in domestic as well as cross-border payments. Then technology plays an important role in regulation and compliance, wherein banks and financial institutions have to report their operations to the Central Bank or Reserve Bank of India in our case. Technology plays a very important role in actually generating those reports. Then there is something called insurance tech, wherein sourcing, underwriting, and policy issuing is also done by technology. So this is a broad landscape of what financial technology is. And what we're going to cover in this session is the payments, the one you see on the lower bottom left-hand side corner, wherein we'll be covering domestic and cross-border payments. Okay, with that, let me go to the next slide. So what are payment systems? Okay, I'm sure all of us have used one form or the other, even though we don't realize that they are payment systems. If we use internet banking, or if we do a branch banking, if you want to transfer money from one bank to another or pay college fees, we either use IMPS, NEFT, RTGS, or the United Payment Interface. So these are for domestic payments. IMPS, where you have an immediate payment system. NEFT is also today become immediate. It was not so before. There was a 2-hour delay, but now it's become 24 hours, and within 20 minutes or 30 minutes, the transfers happen. RTGS is for real-time gross settlement, which happens for large amounts, and UPI is for micropayments, when you want to pay for your groceries and things like that. The second one is international payments, where cross-border transactions happen. When I say cross-border transactions, not necessarily those of cards, but very large payments, like somebody buys 2 containers of crude oil, then it's called, you'll need to do a cross-border payment by way of trade finance. In that case, an organization called SWIFT actually enables such payments. So we will also be looking at SWIFT. And let's say you import chemicals or you import large consignments, then you'll have to do a SWIFT transfer. And SWIFT is always between institutions. There are no retail SWIFT messages. So even if you do an FX transfer, if you go to the bank, sometimes the messages are carried through the SWIFT terminal. Okay, so we'll be looking at that. And then we'll also look at cards, wherein if you're using a Visa or a Master cards, let's say in India, of course, we do have two other card franchises, but they're not so popular in India. They have a separate channel in which the payments are settled. So we'll be looking at three different forms of payments, which forms the bulk of payments in India. Of course, we do have this, other money unions which actually transfer money, but then they have a separate infrastructure to settle the payments. So predominantly, most of our transactions in India depend on either 1, 2, or 3 of these payment infrastructures available in the country today. Okay, so what essentially are these payment systems? They are an organization which actually sets up some hardware and writes the software to actually source the transaction and settle it. So just sourcing and transferring the money is not enough. You will need a settlement system to ensure that the transaction is settled. So a settlement is a very important portion of the entire payment system. If you don't have a settlement, which then it's unlikely that it's called a payment system. It's just a transfer system. So a payment system should not only have transfers, it should also have a settlement. And what do we mean by settlement? It will tell you on which day the transaction was settled with both the sides or both parties, the remitter and the beneficiary, when they have received it, and on which day the transaction is deemed as settled. That's very essential because if you don't have a settlement system, then it opens a Pandora's box for legal litigation and things like that. So settlement system is very, very important for a payment system to be very effective and popular also. Okay. So let me go to the next slide. So in domestic payments, what are we doing? Okay. First thing we should realize is the payment system is not just about having a piece of technology, hardware, and somebody to run it. There are laws that the payment systems actually have to comply with. And we have a lot of laws that are actually passed by the parliament, and then there are certain institutions that have been set up by an act of parliament, which allows these payment systems to actually gives the legal framework for these payment systems to operate. So what are those institutions? The first one, of course, is the Reserve Bank of India. Now, what does the Reserve Bank of India do? It is a primary institution for clearing of the checks. Okay, if there are still checks that are being cleared, high-value checks, and the only person who can clear it is RBI. And today it's called the ECS, Electronic Clearing System. And in the northeast of India, in some of the states there, SBI acts as a clearing agent for RBI. Okay, it has been so. I do not know if it has changed today, but still in some very remote parts of India where RBI doesn't have a presence directly, SBI does the clearing. Then we have a law called the SEFT law, or a Special Electronic Fund Transfer, which was passed in 2003 and 2006, that gives us the framework for electronic transfers. Then we have another institution called the Clearing Corporation of India, which is essential in settling the trades in government securities and foreign exchange. So the Clearing Corporation of India actually settles all the purchases and sales in government sectors, including treasury bills and G-Secs of various maturities. So if there is a bank or a financial institution that actually picks up or purchases government securities or sells it back, in which case the institution actually settling it is the Clearing Corporation of India. They also settle all foreign exchange transactions between various banks and institutions outside. So they act as the nodal agency for settling trades in GSECs and foreign exchange. And in foreign exchange, I mean, predominantly in India, if you have to trade in foreign exchange, you can either do it in US dollars or Great Britain pounds. If you want to buy any other exchange, there's something called a three-leg transactions where you have to first convert it to dollars or Great Britain pounds and then find an exchange rate for the other currency. So you always go through either the US dollar route or the Great Britain pound GBP route. So that's Clearing Corporation of India. Then we have something called the Central Securities Depository, which acts as a custodian for all the security issued by the Government of India. Now, when I say security, you must be wondering what is it? It is nothing but a bond or any fixed instrument, fixed interest rate paper. I mean, normally securities are also called paper, which is issued by the Government of India. So security meaning anything which is interest-bearing instrument by the issued by the Government of India. So the Central Securities Depository, along with the Clearing Corporation of India, decides on the settlement in government securities and where the securities will lie once they are purchased or sold. Okay. The fifth institution that actually is involved in domestic payment settlements is the negotiated dealing system. Now, this also trades in the government securities in the DMAT form. It does all the order matching and all that. And I mean, that system, it's actually a piece of software which actually decides if somebody places an order, whether he gets the shares or somebody else gets not the shares, but the government securities. And who is the seller? It does all the order matching and settling whole thing. Then there is another one, another application called the Liquidity Adjustment Facility, which is also a piece of hardware and software, actually held by the RBI. It, based on its algorithm inside, it transmits all the interest rate signals. You must have seen that if you have, any one of us who has taken a loan will know that these days with floating rate, the banks adjust the rate once in 3 months. But that's for the retail customer. Within the bank itself, they get almost on a weekly basis what is the likely interest rates that they're going to foresee in the coming future. Based on that, why that interest rate changes? It is because whether the money available in the market is high or low, or rather the quantity of rupees that is available or the quantity of dollars that is available will determine what is the rate of interest that somebody is willing to pay. The one way of understanding this is look at the Indian rupee and the US dollar as a commodity. More number of people want something and the resources scarce, then the interest rate rises. If there's too much of this commodity, then the interest rate drops because people are willing to pay. There's too much of anything and the demand for it reduces. So people are willing to pay less. So based on how much rupee or US dollars available in the market, this particular algorithm actually transmits what is the likelihood of the interest rates going up or down. If you follow any of the financial newspapers or one of the financial channels, you will see that the RBI very regularly comes and says whether they're going to reduce the interest rates or increase the interest rates. That's based on this liquidity adjustment facility, which basically the RBI has a notion of how much liquidity is healthy for the country. And based on that, it will ensure that only that amount of liquidity is available into them within India for people to actually utilize. Too much of liquidity means that the interest rates drops and there'll be an inflation. And if there's too much liquidity in the market, even vegetables might become costly. So the idea is that it's a very tight balance which the central bank actually tries to maintain to ensure that they have to control the inflation, plus there should not be any scarcity of liquidity so that it becomes difficult for companies to borrow and generate business and hence jobs. So that's a very a nice a piece of software and hardware that the RBI has got, which actually tracks the amount of money that's in the market today. Okay, when I say market, it's a money market. The money market could be for the Indian rupee, for the US dollar, and the Great Britain pound. And the money market is a virtual market, like an exchange where all banks come and purchase money, and there's something called a call money, and they each bid on based on how much money they need, or on their perception of how much money they can lend to a business. So based on that, this liquidity adjustment facility sends out signals. So that's quite a analogy to understand what the liquidity adjustment facility does. And coming back to our, going further ahead in the domestic payments, we have some institutions in India which also participate in this. What we saw in the last slide was one institution and several applications that are actually contributing to the domestic payments. We also have other institutions like the NSDL, which is National Securities Depository Limited, which acts as a custodian of all the equity shares of purchased by financial institutions. Let's say LIC buys the shares of one of the listed companies, it gets deposited in NSDL. Then we have the central depository. The NSDL is for retail investors. Then we have the central depository services, which acts in a similar fashion for corporate investors like financial institutions. They keep their demat shares there. While if you as a retail investor have a demat account, it will be opened in NSDL. And then we have the National Securities Clearing Corporation, which is actually the clearing house for the National Stock Exchange. And they actually clear all the trades that are matched. So suppose somebody puts a purchase and then there's a buy order, a matching, and the this one is the transfer of shares and money is done by the National Securities Clearing Corporation. We also have a Bank of India Shareholding Corporation, Shareholding Limited, which is a venture by Bombay Stock Exchange and the Bank of India, which is essentially again a clearing house. If you trade on the BSE and your purchase and a sale get matched, the clearing is done by this particular institution. So what we have seen is so far is that we have seen what the landscape of fintech involves and what payments, domestic payments involve. Now we have come to what are the institutions that are actually participating in the domestic payments, entire domestic payments life cycle. So we've had several institutions. What we've seen in the previous slide is we've seen from RBI and this, all the government securities. And the next is we have seen all the NSDL and CDSL services of the exchanges. The next thing is we will also see what are the other regulatory agencies that are actually participating in the domestic payments. We have RBI, it regulates the banking and the payment system. I'm sure all of us have heard of it. There is another institution called SEBI. It is a regulator of all the securities and commodities in India. You want to buy a piece of equity, you have to go either to NSE or BSE, and any dispute is regulated by SEBI. How the exchanges have to behave and what regulatory filings they have to do, and so on and so forth. Then for insurance, we have the insurance IRDF, and it's a regulator of all the insurance policies. Okay. Then you also have a PFRDA, which is a regulator of pension funds. The Pension Funds Regulatory Development Authority, which regulates how pension funds should actually be administered and executed. So those are the other regulatory agencies in addition to the RBI, which actually are involved in the payment systems. They're all large agencies. And so what are the legal frameworks that are available for all these agencies to work for the payment systems? One is we have the Foreign Exchange Management Act, or FEMA. It earlier used to be the FERA, but in 1999 it became the FEMA. And then we have the Securities Contract Regulation. I'm reading it from the right of my slide. We have the Banking Regulation Act 1999, which actually lists out the banking regulations. Then we have the Negotiable Instruments Act 1881. This has been modified slightly, but most of the original tenets that have been set out in the original act are still being followed, except for the settlement portion where certain changes have been made for electronic settlements. And that is covered in the IT Act 2000. Okay. And then there is a Depository Act, which was actually done in 1996. Then we have the Indian Contract Act 1872, which also governs portions of the payments and settlements. And then we have the Payments and Settlements Act 2007. So if you look at all of these, the Negotiable Instruments Act 1881, which is you see on the right-hand side right at the bottom, has been slightly modified for the electronic form by the IT Act 2000 and the Payments and Settlements System Act 2007. So other than these changes, the Negotiable Instruments Act is predominantly what governs the payments and settlements framework in India. Except for small things where securities are involved, you have the Securities Contract Regulation. The Foreign Exchange Management Act comes in when you deal with foreign exchange and so on and so forth. So predominantly, these are the legal framework that's available for any electronic systems to actually to pay and settle transactions. So as providers, we have to ensure that the data that we capture is sufficient and enough to ensure that if there's any dispute, we can actually prove it to them, or rather we can show them what has happened from the user's side. So that's the reason why I've put in this. When you create payment systems, you need to capture sufficient data to ensure that even if there's a dispute, which there will always be, we have sufficient data in the databases to ensure that this transaction was carried out or not carried out, as the case may be. So in the rest of this process, we will see how all of these affect the IT systems when we create payment systems or payment aggregation systems. So going forward, let's start with cards, actually. We should understand now how the cards behave, because the cards generally don't follow the normal payment cycles that I have actually outlined in my previous slides. Because credit cards are a class of its own. They're issued by card companies which are 100% owned by banks, or sometimes not at all owned by banks. And they have aggregators who work differently compared to other financial institutions. So what happens when any one of us go and swipe a card? I mean, I'm talking about the first swim lane here. Okay, let's say I go to a merchant. I have one of these cards, American, Discover, Visa, Master, or any other card, store card. I just go and swipe. What happens? So what happens in the merchant is once I swipe the card, it hits the ATM switch. Okay. What happens in the ATM switch is the ATM switch checks, let's say, whether the incoming card, okay, is on us. Now, what do I mean by on us? Now, let's say the merchant, I go to a shop here, local in Chennai, to buy buy a laptop. The shopkeeper would have tied up with a bank saying that give us a card POS machine. Now, when let's say that POS machine was supplied by, let's say, State Bank of India. Now, I carry a HDFC card. Okay, I go there to that place and say I want to buy a laptop, and I show him my HDFC card. So it is a Visa card. He says, okay, I can accept it, and he swipes it on his POS machine, which is actually issued by SBI. Now, what happens the moment he swipes the card, it hits the SBI's switch or ATM switch, it is called. An ATM switch is a piece of software, and you have several ATM switches, the most popular being Base 24. And what happens is once it hits that ATM switch, the ATM switch will check if this card is issued by SBI. Now, if it is issued by SBI, it will straight away route it to the card management system of SBI and get the authorization done by SBI itself, okay, based on the limit that is set on the card. However, in my case, I'm swiping a HDFC card on an SBI POS, so it is not on us. So, because it is a HDFC card, it will go to the Euromoney Visa, switch. It's called an EMV switch. EMV stands for Euromoney Visa. So the switch will check where is the card coming from. It will check the card numbers and then figure out that it's a Visa card, so it can actually authorize. And it's come from an SBI switch. So, and it's a HDFC card, so SBI is not authorizing it. So it has to check and figure out what is the limit to which it can authorize. So what it does is it sends a message to the card management system of the issuing bank, in my case, I used a HDFC card on an SBI machine. So it will send it to HDFC and ask for an authorization. So the HDFC switch or card management system, depending on which is connected to this one, will authorize it, and the transaction will flow back to the POS, all in a matter of seconds or microseconds. It practically doesn't even have a delay. So this is the mechanism in which an authorization happens. And there are various mechanisms. You can do an EMI on the card. You can just take an authorization, not deduct, several things you can do. But this is the method in which it happens. And the types of cards that are involved are various types, depending on the country in which you originate. For example, today, if you take a look at the credit cards available, it's an NFC card or an RFID card, which you need not even swipe. Okay, you can just go and tap it and it works on the POS machine. But if I take this card and let's say go to another country, maybe in Africa, the NFC readers are not enabled there. That's the reason even an NFC card carries a magnetic strip at the back. So the magnetic strip is probably has a widespread usage, irrespective of the country that you are, because magnetic strip readers are available predominantly everywhere and they are low cost. So most of the nations which do not have NFC readers still have magnetic stripe. Some readers are chip-enabled cards, which was there a few years back. You just push the card into the chip in the reader, and then you can do it. So in case you travel to a country where NFC or a chip is not enabled, you can still use a magnetic stripe to swipe it and then get the transaction through. Otherwise, in countries where NFC is enabled, you can just tap it and it works. And of late, you have phone-based cards, which means you can store your card details. If you're having a Samsung phone, you can store all your cards on one of its app, and you can just wave the phone in front of the POS terminal, and it gets deducted. That again is based on the NFC principle, but I see only Samsung and I think one other. I think the Apple phone also allows us to do it, but that's possible in some phones. It's not widespread, but still possible. Okay. So that is cards, and in cards, the mechanism of acquiring a payment is entirely out of the purview of the payment systems that we've seen in the previous slides. Because of its widespread usage, the number of transactions and domestic as well as international transactions have to be authorized. They have a separate backbone to actually run their payment systems, mostly run by Euromoney Visa. American Express has a separate backbone altogether, and so does Discover. So that is about cards. And Now, what happens when a card actually sends the authorization? Now, I've told you that once I swipe the card, the message goes to the ATM switch, which also handles the ATMs. It's the same. Card switch and ATM switch are one and the same because both are run by EMV. What happens is the message that is sent is in the form of the schema is in the form of an ISO 8583 message. So what is an ISO 8583 message? It's nothing but a stream of characters. If you open it in Notepad or TextPad, you will just see a stream of characters. Okay, any of these messages can be opened using Notepad or TextPad. Okay, so yeah, I'll come to, I think it's there. What happens is you have a header, you have a message type identifier, you have a primary bitmap, you have a secondary bitmap, and you have the data elements. This is how the message is structured. Now, what is a header? Now, in ISO 8583, okay, the message header, MasterCard doesn't use a header, okay, which means that header portion is actually blank. But the Visa uses a fixed format header, and this will be the header. So I caret TIS 001 64010. It means something to Visa. What it means is that whatever the rest of the image has to be read in a specific way. See, because Visa is so predominant across the world, they have to handle old formats running in the African continent or in deep Middle East, along with most technologically advanced switches like in India, the US, and parts of Western Europe. So to have the compatibility within with old formats and new formats, they have this fixed format headers, and this fixed format headers tell Visa what is the message format that is coming in the rest of the characters. Okay, but MasterCard doesn't use that. So that is the header. Then the rest of the message type identifier has the version, the class, the function, and the originator. Don't worry too much about this. Just remember that these are all required for the this one to actually the message to be successfully interpreted. What is a version is version as if you have 0xx, it means the message is following the 8583 1987 format. And if it has 1xx, then it has 8583 1993 format, and so on and so forth. So the next two, this one is a class. You have the class of message. I told you sometime back that a message can either be to deduct money or just an authorization. So class 2 means it's a financial message, which means perform financial debit or a credit. If it's 1, it's an authorization message. And if it starts with a 3 series, it's a file action message. If it is 4x, reverse the previous transaction. 5 is a reconciliation message. So the various formats of message. Then 6 is an administrative message. And 7 is a fee collection message. And 8 is network management. See, what happens sometimes within the network, they send messages for some adjustments saying that do this and do that. So the switch actually carries certain activities when it encounters 8x messages. So the next is a function. So what is a function of a message? So if it is a 0, in this 4 formats, if it is on the third place, if it has a 0, it is a request. If it is 1, it's a response to a request. If it is 2, it is advice, and advice response, reconciliation message, and acknowledgement, and so on and so forth. The 4th digit, it tells you the originator of the message. If it is 0, it is acquirer. Then if it is 1, it's a repeat from the acquirer. If it's 2, it's an issuer, the guy who has issued the card. If it's 3, it's a repeat from the issuer. If it is 4, it is sent by somebody else. And if it's 5, it's other person who is actually asking you to repeat. It is possible for all of this to happen. So if you have 4 characters in the header, message type identifier, each of these characters actually means something. So you can have 0200, meaning I'm using the 8583 1987 format. It is a financial message. It is a request, and it is from the acquirer. That's what it means. So I can also have 2200, which essentially means I'm actually handle all of this by using a few functions in your programming code. Okay, so that is about how card payments are made. Now we'll come back to our domestic payments, which are covered in the first few slides. We have what is called the RTGS, which was introduced in March 2004, when first it was, created by, I think, a company called eFunds, I think so. RTGS was, RTGS was eFunds, I think, but in March 2004. And then NEFT was created in 2005. I think RTGS was created by Logica CMG, if I'm not mistaken. It was Logica CMG, not eFunds. And then NEFT was came out in 2005. IMPS, I'm not sure when it came out, but sometime post 2005 or 2010, IMPS came out. And then we have the UPI interface, which came out fairly recently. It offers 24/7. And most of these have become more or less 24/7, except I think for RTGS. NEFT is almost 24/7. IMPS is also 24/7. So these are the domestic payments that are available to us. Now, these actually use a different messaging format compared to what the cards are using. So if you look at these networks, they use something called an ISO 20022 message schema. Okay, the schema is different. And the ISO 20022 message schema uses the XML format. Okay, and the XML format is like what you see in these two blue boxes. The right-hand side blue box actually is an extension of the left-hand side blue box. It might be very small, but I can read it out for you. So it mandate initiation. This is the format or the schema for mandate initiation. Suppose you want to create a mandate for a request for actually creating, deducting some amount. You have something called a group header. Then you've got the message ID. You have credit or debit transaction. Okay, time actually. Sorry, not transactions. Time. Then you have where and all you got. You have the address and the phone number. Sorry, phone number, and so on and so forth. I mean, this is predominantly a standard across all ISO 20022 message schemas. So most of our domestic payment system, except for the cons, use this schema, the XML schema. So what happened? That is okay. That is the ISO 20022 schema. Now coming to the tech side of it, there are plenty of XML parsers that are available in most languages, and you can parse this file in almost a few microseconds. So handling the schemas or generating the schema is not very difficult as long as you know what to generate. It's much easier than generating the message formats in the ISO 8583 because this uses new age XML message schema. Then there are tools to actually generate and process XML schemas, and they're available in most languages today. So handling these forms of messages are much easier compared to ISO 8583. Coming to an extension of the domestic payments, are payment gateways and wallets that are actually provided by other players other than the actual banks and financial institutions. Now, what are the various payment gateways and wallets that we have? I mean, we have worked with AirPay, Atom, EBS, Financial Software Solutions, Instamoyo, Razorpay, PayPal, Paytm, PayU, and Worldline. About 10 payment gateways is what we remember. Then there are others which have come actually, which are UPI based, which I'm going to cover in a couple of slides. So most of these operate on the same, more or less same principle. They actually attach to some form of a web payment, I mean, a website or a content management system. You give in your card details, it actually connects to the bank or the credit card company and then does a deduction and then pays the merchant. So you basically acquire, let's say your college fees you have to pay, the college site will have a module written, and then you will just deduct the money from the card and then pay it off to the college account. In about a few minutes, the money will be transferred to the college account. Then the settlement happens at the end of the day. So pretty straightforward. I'll show you a demo and I'll also show you the code in a couple of minutes. But let me finish this presentation before I go ahead and show you the demo. And yeah, we also have P2P payments. We have Amazon Pay, Beam, Google Pay, WhatsApp payments. They're pretty much riding on the UPI infrastructure. The one here, I think, is Beam. Then you have GPay here, and then there's WhatsApp payments. The interfaces could be different, but the underlying infrastructure is only the UPI payment. Okay, so Beam actually directly is also a reference implementation of the UPI payment gateway, and even Amazon Pay or GPay or WhatsApp, they all use a UPI payment gateway that's available to us. Now, you might ask, why do you need a payment gateway like this when you already have so many payment systems? See, the idea is to actually bring down the cost of transactions. If you look at Japan and things like that, even their credit card, Master Visa transactions on their credit cards are not settled by Master and Visa. They're settled by their own national, infrastructure. And similarly, we are trying to come to that so that we don't have to pay the transaction fees to an outside agency to actually settle or authorize transactions. So over a period of time, irrespective of the payment method you use, it will be settled by UPI. That is the idea. Okay. And irrespective of the franchisee also, you could use RuPay or Master or Visa, it will all be settled by UPI over a period of time. I'm hoping that will happen, but let's see. So That was about domestic payments. Now, if we come to foreign exchange transactions or cross-border payments, we have the Society for Worldwide Interbank Financial Telecommunication, or SWIFT. It is headquartered in Belgium, and they have fabulous infrastructure, including satellites, undersea cables, wireless towers, and everything to ensure that transactions are sent from one bank to another bank almost instantaneously. Any large bank which deals in foreign exchange will have a SWIFT terminal, and the SWIFT terminal connects to the SWIFT infrastructure, and they have very standard messaging formats, which I will show you in the next slide, for actually transmitting foreign exchange transactions. In addition to foreign exchange transactions, even trade-related transactions are transmitted. So any trade finance-related transactions, like transmitting letters of credit or guarantees or forex purchase and sale, they're all sent through SWIFT. So let us take a look at what do they offer in terms of messaging formats, which is our actual interest. They offer a lot of messaging formats to enable banks to transact. Let's say you want to pay for, university fees abroad. You have to go to a bank and say, I want to purchase, and they will actually, and you remit it, a message will go out, and that message will be of one of these formats, and it will go and directly hit the university's accounts. So what are the types of messages that SWIFT offers? It offers something called the MT0 series, which is essentially system messages. The one series are all customer payments and check clearing. When I say this, it's always in dollars. Okay, and I think to an extent on Great Britain pound, but predominantly dollars. MT2 series are financial institution transfers, which essentially means bank-to-bank transfers and things like that. MT300 are all treasury markets. Treasury markets are markets like the share market, but treasury markets will only deal in purchase and sale of currency and government securities. That's it. Okay. So if you want to purchase large quantities of foreign exchange, it's actually traded on the treasury market. So MT300 is always a treasury market transactions. MT400 are collection and cash letters, basically interbank communications of collections and cash. Okay, MT500 is all security market transactions. Let's say you want to buy something on the London stock exchange or on the DAX or on the NASDAQ. And if you want to remit money and purchase it, if you go to a bank, they will definitely do a MT500 series message to actually communicate it to the other side. Then MT600 is treasury markets specifically for metals only, like gold, copper, and things like that. If you do any transactions on the London Metals Exchange and things like that, they go through a MT600 series. Then MT700 series are for letters of credit and guarantees. So if you open, let's say you want to import a large quantity of sulfur from some other country, you have to open an LC. Then if you approach a bank, they will create the LC and send the MT700 to the correspondent bank on the other country. MT800 are traveler's checks. I'm not sure if it's popular today, but it used to be popular earlier when we didn't have credit cards and we were carrying traveler's checks. I'm talking about pre-99. Subsequently, traveler's checks have kind of usage has come down. In India, we carry credit cards, but maybe other countries where the infrastructure is still picking up, you will have traveler's checks, and their MT800 messages will be very popular. And all cash management cash management messages and customer statuses are sent using the MT900. Now, what are these message formats? It is just like the message format that you saw in the earlier slides in case of ISO 883, which uses a textual message format, or in case of the ISO 20022, which uses XML. This case, they have a very specific format, which is very proprietary. We don't know how it is. They themselves provide the SWIFT terminal and the infrastructure. So it is so guarded. The reason being that it involves a large amount of money transfers. So they keep it closely guarded secret unless you sign up with them and then start developing something for the SWIFT infrastructure. And unless you become their partner and start developing, they don't disclose what kind of message schemas that you need. But essentially, it's not a message format. That's what it actually means. So we have extracted one for you, MT798. How does it look? You have a transaction reference number of 20 characters. Then you have a sub-message type, which is this one. Then you have the proprietary message. Then you have the message index, which tells what part of the message is being transmitted, and the customer. This is if you want to apply for an LC. This is what a message. If you dissect the message, this is what the schema will look like. It's again, it is transmitted through wires with encryption and things like that. And this is how the message schema will look if you dissect the message or document it. Other formats will have different schemas. Okay. So what I've shown you here is MT798. Let's say you want to, open a letters of credit. You go to a bank and say, look, I want to import something, open an LC. They will open an LC, and this will be the schema that is sent to the person who's supplying. They will send it to his bank, actually. So now the other side of it is the emergence of cryptocurrency, highly unregulated, but still of a lot of interest because of the kind of hype that it is actually generating, is a lot of things based on, there are several cryptocurrencies. Some of them, I'm sure all of you have heard Bitcoin, and then you also heard of Ethereum. So what is cryptocurrency? It's another form of, currency, tokens, wherein the currency's intrinsic value is not dependent on gold or any natural asset, but is dependent on the ability to do work. And it's also dependent, and the whole thing is built on a technological blockchain. So it's a token which has a highly encrypted series, very difficult to crack, and is based on a technology called blockchain. And the proof of work has to be performed for us to actually obtain a unit of that currency. So what are the currency we're talking of? We have one is called the Bitcoin, the other one is Ethereum, two most popular currencies. So how do we get that? There is something called a proof of work. We need to, in case of Bitcoin and Ethereum, we need to solve complicated mathematical equations to actually obtain 1 unit of Bitcoin. Now, what does that cost? Okay, 1 unit of Bitcoin, if you run servers to actually mine and solve these complex puzzles, the servers and the associated algorithms and the air conditioning, all that works out to about $11,000. So once you spend that, there are high chances of you getting 1 unit of Bitcoin. Or to make it easier, you can just go to some cryptocurrency seller and pay $11,000 and bring it. Or if you want a cheaper coin, you take the risk of it being non-tradable. You can still buy something at $20 or $30 as well. But that won't be Bitcoin, it will be some other coins. So when you run the mining software, you will be called a miner, and you will run sophisticated gigs. It works out 11,000 rupees for a Bitcoin. To obtain a Bitcoin. For Ethereum, it's much lesser. Instead, you can go to an exchange and then pay $11,000 and pick up a Bitcoin. So that's cryptocurrency. Now let us see the types of cryptocurrencies that are available. The first cryptocurrency, of course, is is Bitcoin. Then there are alternatives that have come for Bitcoin. So see, today, when the time I prepared the slide, Bitcoin was costing about $11,020. But the Ethereum ETH was available at $383.63. Then there was the Ethereum Classic, which essentially is the original Ethereum. Something went wrong somewhere and it was compromised. So the value of the Ethereum Classic fell down to $5. And there was a fork created, and the Ethereum was actually created from the Ethereum Classic. So that is much more popular today. So the Bitcoin and Ethereum are highly tradable cryptocurrencies. That is, you can buy goods and services. You can pay for it on some online shops. If any one of you are using Reddit, a similar technology actually powers a section of the Reddit site as well. Okay, they have some coins which they give very frequent users, which you can use to actually buy things on Reddit, including advertising space. And then you have Ripple, which is also a very popular coin. Then you have Litecoin. Then you have Tether, Polkadot, and Binance. What I've given you is just 8 of the most popular ones. I mean, this popularity keeps changing. It's not that this is going to be standard. Tomorrow, somebody finds a better coin, and then that makes it to the list, and the others go down. So these are the other coins or alternatives to Bitcoin. And once you buy a Bitcoin, what do? You can actually store it in a cryptocurrency wallet. There's Coinbase, Trezor, Sophie, Robinhood, Ledger, and you can keep it. You can spend money from it because you're having one. If you have one Bitcoin worth $11,000, that's quite a lot of money. You can actually buy a lot of things on that. You can actually buy several, computers in it, and probably or pay for, let's say, a huge number of servers on any of the hosting providers, and you can do quite a lot with $11,000. Or if you want to spend $100, you can spend not one Bitcoin as well. So that is about cryptocurrency. And let me see. I have a list of resources for all of you, which you can take a look once you get the slides. These are all if you are more interested, you can take a look at the message definitions or the standards of Swift and things like that. So before I close, I would like to actually show you the code of a payment gateway and also show you how it looks on the site. So, I mean, during my career, we've actually done about, in the last 10 years, we've done about close to 20 to 30 payment gateway deployments. We have integrated over 10 payment gateways itself, the list that you see. So one of these places that we have done is for the TNCA Club. Okay, and let me log in. So I'll show you how it looks. I just hope they put up the December bill and okay. Okay, they've not put up the December bill, but that is fine. That's not a problem. So let me try and pay an advance to see whether okay, these are the payments that I made in the past. Okay, what happens when this actually when I start making a payment? 1 second, I'll. So what happens is the code is here on GitHub for all of you to download and use it. We have open sourced the entire repository. The code that runs on the TNCA Club is available on GitHub for you to actually download and use. So let me explain that. It's called UniView. It's basically a fee collection software in the TNCA club. Whatever you see here, it actually displays a bill. The bill could be a consumption bill, or it could also be the school fees or the college fees. You can list it in a bill. The bill can be the bill handled by this system is of two types. One, it can come from the database, or it can come from an XML file. So what it does is, so this is the thing that actually handles the bill display. One second, I'll just show you the okay, this is a portion that handles the bill display. So if you see that it is converting the XML bill to a HTML file. So essentially that's what we do. And this is the code that actually tells you how the XML is converted to HTML. There are predominantly a lot of parsers, and it just takes the XML and converts using the XSLT, transforms it to an HTML file. If you do not have an XML file, you can read it from the database. So that is the portion that actually reads it from the database. One second. So you can either read it from the XML file or from the database, and then display the whole thing to the student or to the member. And once that happens, the form that is displayed is you either pay the amount that is available on the bill, and then you can, once this one is clicked, it can either go to any one of the gateways. In this case, what you see here, the one that I'm going to show you is a PayU, but we pretty much have all the other gateways as well. One second, I'm just going to that. Yeah, so if you see, we have CC Avenue, we have EBS systems, then we have HDFC EBS, Instamoyo, Pass, PayNemo, and this past payments will show you all the previous payments that have been done. So let's take a look at what happens in PayU. So if you go to the PayU, so what happens? Let's see how the request happens. What it does is it takes all the data that's being passed with the HTML file. It picks up all of these, and it also has a setup that actually keeps track of the merchant keys, the request URL, where it has to post, and what's more important is this particular line, which is the encryption salt. That is, if you need to encrypt the transmission from the website to the PayU's payment gateway servers, you need to encrypt using the salt. This is a secret that only we, the programmers, and the programmers on the other side know. So once that is done, the amount and all the other data is actually transferred to the other side. And once the deduction, or in certain case, non-deduction happens, it is returned back. So what happens when it returns back? So once it returns back, you either have a success or you have a failure. So the success, if you go to the success, it will actually take all the data that it has got from the post. If you are aware of the HTTP transaction, there's a post payload that comes back. It takes all of it and displays it. If it is a failure, it still takes it from the post and then displays a failure transaction, which is here. Okay, and this code is available for all of you. You can always download it and use it to build a payment gateway. If any of you are from the computer science department of any college or any institution and you're tasked with building a fee collection system, by all means, take it and use it. You don't have to give us any attribution. It is free, as in a free lunch. Okay, so we don't need you to tell us that you used it. You don't need to tell any other people that you've used it. And this is pretty much it. With that, I've come to the end of my presentation. So if you have any questions, I can take them. I'll answer them as much as possible. Yeah.
Thank you, Mr. Sridhar, for
Yes,
your
sir.
wonderful and excellent overview presentation and payment system, covering the various aspects, starting from types of fintech systems, payment systems, institutions associated with the domestic payment, landscape of domestic payments, regulatory agencies, legal framework, credit card processing systems, fintech messaging formats, domestic payment mechanisms, payment gateways and wallet, P2P payments, cross-border payments, and ending with cryptocurrencies. It is really an excellent overview, and definitely whoever is interested in knowing about payment system, they would have found it very, very useful. In fact, the subject is so vast, and we have not done justice in giving you just 1 hour in explaining so much. Obviously, we need to plan something like a half a day workshop or a little more to go into the details of various aspects so that their career can be opened up in this area for people who are aspiring to get into financial technologies domain.
Yes, sir.
So, there had been quite a few questions were raised by participants,
Sure,
and
sir.
those are also registered. Maybe we can take them one by one.
Yeah. Yeah, I can go answer them. Not a problem.
Yeah, can you provide a learning path for fintech?
Yeah. See, that's a pretty straightforward this one. In fact, the learning path is there are two things that you need to know. One is on the finance side, and the other one is on the technology side. Today, if you talk about technology, we need to know one scripting language. Okay, in the code that I showed you, the script I've used is PHP, and the framework I used is Symfony. But that need not be the only thing that you need to use, though it is very popular. You can start with knowing how to write programs in PHP for a start. You can then move on to Python and things like that. And also know how to actually start with the payment gateway. I've given you the code templates. You can start with that. And from there, you can choose which direction you want to go, whether you want to be in payment systems or other forms of fintech. And in terms of technology, you can proceed on the cloud direction because that's going to be the future, whether you do it in premise or deploy it on a public cloud. Finally, you need to know the cloud technologies, which is one of the stacks, either Linux, Nginx, MySQL, and PHP, or a mean stack, or whatever stacks. So I would suggest have two parts. One is on the technology, one is on the functional.
Okay. When so much of developments are happening in the online or digital payment systems, what is the future of on-premises banking and other institutions? Are they going to disappear, or what is your view on this?
So the, bank institutions might not disappear, but they will exist either in paper form or in premise. So expecting things to vanish is not a good sign, not for the country, not for us. They will be institutions. They might not exist in the present form by having brick and mortar. You must have already seen it. Kotak Mahindra has got something called an 811 account. You don't even need to visit the branch. You can just open it online. Okay, so and in fact, even the RBI, our regulatory agency, is telling people to actually do more and more of cost savings and pass on the benefits to the customer. So I'm sure all of us know the real estate costs are overwhelmingly high, and they form a portion of the fees that we pay to the bank. So the idea is to do more of the things online, especially when you have such wonderful infrastructure in terms of telecommunications. We are having one of the best in the world. You can definitely do a lot of this account opening online, and but the banks will still remain. They will still remain virtual.
No, but the problem in our country seems to be infrastructural issues. Like even the ATMs, if you look at it, we have the least number of ATMs per lakh of users. Okay, and also still there are a lot of security related issues digital literacy is very poor. So considering all these facts, I mean, what is your opinion, our payment systems status?
Yeah, see, ATMs is a different kind of automation, and the payment systems are different. ATMs still rely on physical presence. So yeah, they had their they had their life cycle. If you see initially setting up an ATM, every bank had just only 3 or 4 ATMs with VSAT terminals and things like that. Today, with MPLS lines, the number of ATMs has proliferated. But by the time that technology caught up, we have a newer technology of cashless payments itself. The need of currency notes itself is not required today. So we will see, though we have not seen a penetration of ATMs in several parts of the country, we will necessarily see penetration of cashless payments across the current country, because the contact point is not an ATM, it's just a mobile phone. And
So we have leapfrogged the ATM.
Leapfrog, yeah. Before we could actually proliferate ATMs all across the country, we've already got a new technology. I mean, that's what the technology is. Before you finish one, the other one crops up.
No, but only thing is that digital literacy appears to be a little more problem. So that is one thing.
Yeah.
And can you highlight some details on the part of integrating payment options on a website?
Yeah,
because, most of the websites, they start collecting payments. And what is the mechanism behind that? And then what are the security issues in that area?
Yeah. I'll touch the demo that I actually showed a few minutes back is on the TNCA Club website, where we have attached a payment collection or rather fee collection. So the mechanism involved is pretty straightforward. You put up a form, HTML form on it, and when the form is submitted, you capture the data over a post variable, and then transfer it to the gateway after encryption, and then process the return message. That's in the simplest form. Yeah, there are mechanisms. The code is there to actually relate. If somebody wants more details, I mean, we can take it up beyond this session and get something developed as a use case for them. They can develop. I can just oversee, because we don't want to get into that again. And when it comes to security, yes, there are security. Security is a very broad term, and that itself is a session in itself. But a couple of things that you need to be aware is there is something called a man-in-the-middle attack, and that's something we should guard. If there is, if it is not very secure between the bank and the originator, I mean, it's going to be picked up by somebody in between. And man-in-the-middle attacks can happen anywhere, including the router on which you are actually connecting to the internet. So that's something we have to be very careful.
Can you provide some highlights on job opportunities in fintech area?
There are plenty of job opportunities, and there are not many people who are willing to actually come on board, because it looks very nice from outside. But once people come in, there's a lot of hard work. See, I'm sure all of us have seen that anything to do with finance is tough, and anything to do with technology is tough. Now, finance and technology becomes much more tougher. And there's a lot of opportunities in RegTech, in FinTech. In fact, you wouldn't believe me, sir, we almost revamp our products every year. And the kind of people who are required there, who are people with a passion of staying in place, not just when things get difficult, they just wrap up and go away. So if you have the skills to actually, you have the passion and you have the skills to actually stay put in spite of the difficulties, then the world is just open with opportunities, whether it's in terms of cryptocurrencies, payment systems, regulatory technology, plenty of opportunities.
Now we hear a lot about fintech startups. What exactly they do? And what is the future for these startups?
See, the fintech startups are several. So most of them today are, the fad today is payment systems. In my presentation, you have seen we had 10 fintech startups, which actually created 10 payment gateways. Now it's becoming overcrowded there. So either we will see consolidation. Now, the next buzzword is on regulatory technology and reporting. So that will see a lot of startups for some time, after which, and lending is another area where we're seeing a lot of startup, because people want to reduce the cost of lending. Because today, if you want to actually lend to somebody, the interest rate also includes the cost of processing. So it's quite steep, considering that you need to have 3 people verify whether you exist as a person. They have to come to the office, they have to come home, they have to check, let's say, your property, your credentials, and so on and so forth. We have a platform, the AnyBank platform, which was actually introduced when Sir actually told about me in the introduction before the session began. That has workflows for actually making the process much faster without much of manual intervention. So a lot of startups are also engaged in actually doing that. So digital lending and regulatory technology are the next 2 big things which will see a boom.
Okay. And then can you explain something about the role of analytics in fintech?
Yes, sir. Actually, there are a lot of scope for analytics in fintech, because today everybody is very busy in smoothing the workflows. But not many people are measuring. In fact, let me give you a simple example from the lending industry, where people lend and there are borrowers and the banks actually lend. There is no way of figuring out which point or which product is the most popular among borrowers. Now, there is absolutely today no way, because there's no measurement criteria actually being used. There is no way we even know what is the flow of money maybe 12 months down the line by way of EMIs until I reach that point. So the scope for analytics, especially people with statistical backgrounds who can talk about things like how you can do correlation and the probability theory, those 2 areas, I see a lot of scope. In fact, especially in the lending industry, we ourselves are working on a project, which we've been working for it for quite some time, to figure out when a prospect actually gives us his data to actually process a loan, what is the probability that he will default based on his profile's correlation with other people in the same industry, same profiles and things like that. So that's one of the projects that we are currently working on. The other people will be working on other projects in this. There's a lot of scope for analytics and probability and distribution and things like that.
But you are mentioning about the future is going to be on lending systems, online lending systems and things like that.
For the next 5 years at least.
Yeah, but unfortunately, we have been reading quite a few newspaper reportings about the harassment by recovery agents, and then suicides associated with that, high rate of interest, and people recycling from one lending system to another lending system, and they are getting into cobweb of the online transactions. Is it good for the society?
It is not good, actually. See, in terms of harassment by recovery agents, we are not supposed to do it. If any borrower you're harassed, you can just approach the legal framework, and they're going to have it. There is thankfully, for small mercies, our legal framework is extremely sound and it protects the borrower. Okay. And if you feel that you're harassed by any recovery agent, please approach a lawyer and you will definitely get a very favorable settlement, which is fair and favorable. Okay. Having said that, yeah, it is not good, because while processing, somebody has taken a shortcut to actually give somebody a loan or an advance way beyond his capacity to repay. So which essentially means the initial assessment of the customer itself was not correct, which is where digital lending again comes into play, wherein it is done very fearlessly and done by algorithms. And digital lending is supposed to be doing that. If you bypass that and do manual, then all kinds of emotions and things come into play, because you're trying to see his application and then see what is his age, how to get more of it, how to get more of his salary. I mean, you find that he's drawing 30,000, but his EMI is coming to 10. You try to get hold of the other 20 also, and all kinds of funny things happen. But unfortunately, what is happening in the automation today is banks are spending a lot on automation where they are supposed to put people. You will see automation mainly in customer-facing sites, like they have Alexa. Alexa is from Amazon, but they have chat agents for talking to customers. That I feel is a bit an overkill. When you have to talk to people, people have to talk to people, not machines.
Yeah.
Where you need to automate, that is where you need to punch applications, where you need to read automatically, where you need to take automation very seriously. There they're putting a lot of people. You see a lot of loan processing agents. There are about 100 people in each floor punching in applications and approving the applications. I think it should be the other way. They should automate that and put the people here.
In fact, the customer retention depends on personal touch.
Personal touch,
So,
yeah.
The chatbots are not really good, and then because they are programmed to answer only some selected questions, they don't go beyond that.
Exactly. Yes, sir.
Can you give some use cases of artificial intelligence in payment systems?
Yes, sir. See, artificial intelligence, it depends on which algorithm you're using. So if you're using Bayesian methods, okay, for payment systems, you can easily detect fraud based on the kind of transactions that you're getting. For example, let's say you're processing a lot of lending payments and it has hit the payment systems. And now you're just about to transmit. Now, you can run a Bayesian algorithm on that and figure out if any of these is going to a fraudulent customer. One, that's just about Bayesian. There are 11 other algorithms, and Bayesian is just one algorithm to figure out if it's a fraudulent customer. You can use other algorithms similarly. I can think of one offhand just now, but yeah, we are working on the Bayesian to actually figure out frauds in lending much before the payments happen, but you can do it at the payment stage also.
Okay. And there's a question regarding the cryptocurrencies. Can we purchase cryptocurrencies in India, and what are the regulatory mechanisms?
You can by all means purchase a cryptocurrency in India, but you will be solely responsible. And if there's a dispute, the government will not step in to actually save you. And that is exactly what the finance minister has said. Cryptocurrencies are not banned, but taking loans from others to buy cryptocurrency will actually ring alarm bells, and people will come after you.
Okay.
Yeah.
There's a question relating to SALT. How is this SALT is transferred to counterpart programmer? Is it part of the message itself?
No. The SALT is actually a key exchange by the payment gateway to you when they give you the kit. So it's like a private key, public key. It doesn't go as part of the message. So the public key is actually shared with us and called the SALT, and they in turn have the same thing that side, and they'll use the SALT to actually encrypt they're using, I think, DES 256 is what they're using. If I check the code, I will know.
Okay, there's a question regarding foreign exchange payments. Basically, when credit cards are being used for making payments abroad, so the foreign exchange rates are being applied.
Correct.
Is it a dynamic mechanism, or what is the mechanism behind this allocating the currency rates, and then how the settlement takes place between the international party and then the Indian party?
See, it's done using the EMV, Euro Money Visa networks. The payments and settlements, if you use either Euro Money or Visa or the MasterCard, it is actually done within their network. So if they want to purchase, let us say, dollars and settle, because let's say EMV India wants to settle a transaction in Italy, and it involves some $100. Okay, they will do it based on the date it is being billed in India. So let's say you've swiped a transaction, it's almost the same. Today it's electronic, it doesn't come after 2 days. The day you swipe, it immediately hits the gateway in India. So on the same day, whatever is the rate, which is the worst rate you can get, you won't get the best rate for credit card transactions. It will usually be the cash rate, which is probably the bad rate that you will get. If trade finance guys get the best rate, they will get the either the you can negotiate the rate also for trade finance. For cash rates, will be very bad rates, and obviously it will be about 40-50 paise more than that the corresponding rate in the newspapers.
Okay.
Yeah.
See, we have so many credit cards like Master, Visa, American Express, Diners. Now, RuPay is becoming very popular. But why people prefer certain types of cards out of this? Like Amex, no one wants to get into Amex. Okay. And then Diners, of course, it is last. I don't think, people now, I've never seen the Diners card being used. And RuPay, though, it is because of the government has made it more or less free, and there are no transaction charges are associated. Some charges are comparatively less. And is this RuPay card is applicable globally? Can it be used abroad? So, what decides the preference of cards?
Okay, it depends on the individual and his profession actually. Let's say if as an individual, my activities are confined to India, I'm okay with just the RuPay card. I need not use even your MasterCard or a Visa card. Predominantly, I can survive with the RuPay card because IRCTC, I can book train tickets, I can book bus tickets, I can pay for certain kind of purchase. Might not be very widespread, but still there. Let's say I'm slightly upmarket professional who would like to travel, a little outside and then probably overseas, or not overseas, let's say within India. You can use Visa Master because it allows me to spend in certain areas where the RuPay might not be accepted, like in online purchases and things like that. But still, Visa and Master are not, if it's not issued as a global card, cannot be used for transactions overseas. It can be used only within India. Then within Master and Visa, there is an overseas card also, which you can take and spend abroad and then come back and then settle your transactions. So as an individual, you can do that. And other question was whether RuPay can be used abroad. Certain countries, yes. I think in Bhutan it's used and Burma it is used. Thanks to our Prime Minister who's gone and started advertising it.
Marketing trip.
Marketing trip, yeah. And coming to Amex, yeah, in India, nobody actually wants to accept an American Express. It's actually a very premium card. The only equivalent of an Amex is the Visa signature card, which the Amex card is usually given only by invite. You can't apply for a card if you don't get the invite. And I might probably step on a few toes. That's the only card I like, actually, because my travels were so huge that I practically paid for everything using that card. I still pay for most of my purchases using that card.
Okay.
Yeah,
Okay,
it's expensive. It is, if you are traveling frequently abroad, making high ticket purchases, it's the best card to carry because nobody even does a verification. It comes without limit. There's no preset spending limit on the card.
Okay. The last question is regarding the contactless payments like NFC, basically the NFC cards. Now, recently, RBI has increased the limit from 2,000 to 5,000, right? So, how safe the NFC cards? Suppose by mistake someone has access to my physical card. So, any amount of payment, like 5,000 rupees can be taken, no? So, when it is so much insecure, why this limit has been raised, and then how to protect this type of transactions? And there is no way that will be, only thing is we will get message. So the immediate action may be to stop, maybe, delist the card or make it hot list or something like that. But by the time, if you don't see the messages, enough damage will have been done. So what is is that this contactless payment, is it really worth the technology, or what is the problem associated with that?
First, let me examine what can go wrong. Assume that you are going, flying from here to Mumbai. Somebody picked up in fact, this has happened to me. My pocket was picked in Cochin just before Kochi airport the previous night. Next morning, I had to catch a flight. I lost the cards. I lost my whole wallet. So, it's gone. All cards are gone, including my ID proof, everything went. So the only thing you can do that, there is a mechanism to protect against that, even if your card has been used. So you can just call and say that you have a hotline for card loss. The moment you call the hotline, your card is blocked. The moment you realize. If you don't realize that card is blocked and still manage to launch the thing, and if the card has been used in 1 or 2 occasions, they will see the CCTV. All card acceptance merchants are supposed to have a CCTV where the card is swiped. That is essential because...
No, I'm not talking about the swiping, but it is the...
you can tap it.
Just the tapping, that's all.
But the camera would have captured his face. If the camera actually focuses in the place near the cash counter where he is actually making the transaction, they will go after him.
Basically, that still, lot of fear is there in using the mode of contactless payment, particularly in places like petrol bunk and things like that outside. So, there's a general fear complex is there among the users.
They need not fear. Only thing, they have to be careful that nobody does it more than once. Okay. Or ask, anyhow, the NFC cards today come with a POS terminal which is mobile. It's not connected to the telephone line. It actually runs on a mobile itself. You can carry it around. You can ask them to bring the POS, or you can go there to, if you want to take care. So it's practically not possible for them to do it twice. If they do it on the only problem is when he has 2 POS terminals. One he does for the petrol bunk and one for something else. Then it becomes problematic. And the same thing, if he does twice, you can ask him to cancel the other one.
Anyhow, see, this payment system personally affects every individual.
Exactly.
So there is a lot of interest is there, and then to know more and more about. And still, there is so much of precautionary measures one has to take. And, it is a ever-growing subject. I think, though they are trying to make it more simplified, still complications are coming up. So thank you very much, Mr. Sridhar. Now I'd like to request Dr. Saktivel, our chairman, IEEE Computer Society, to propose a formal vote of thanks.
Good evening, sir. Good evening to all of you. On behalf of the Computer Society of India Chennai chapter, ACM Chennai Professional chapter, and IEEE Computer Society Madras chapter, I would like to thank Mr. Sridhar, who has given a wonderful lecture on Demystifying Fintech payment system. He has explained in detail about the various payment systems and digital payment systems. So all the participants, I hope all the participants have benefited from this lecture. So on behalf of these societies, we would like to thank Mr. Sridhar Pandurangiah. Thank you, sir.
Thank you very much.
I would like to thank Mr. H.R. Mohan, Chairman, ACM Chennai Chapter, Mr. P. Subramanian, Chairman, CSI Chennai Chapter, and Dr. Akhila, Managing Committee Member, CSI Chennai Chapter, for their dedicated support in arranging this webinar. I would also like to thank all the participants who have participated through the Google Meet platform and YouTube. So without which the webinar may not be successful. So I thank all the participants for their active participation in this webinar. So, thank you, Nanda. Thank you very much.
Okay, thank you. Thank you, Dr. Saktivel.
Thank you, sir.
Thank you, Dr. Saktivel. Before we formally wind up today's program, I have a few announcements regarding the forthcoming event. On 12th of this month, we have a program on what is software engineering, reflections on 50 years of software engineering and the road ahead. And on 15th, we have a program, sequel program, possibly I can say to today's program. It is on demystifying cryptocurrencies. On 19th, we have a program on cognitive computing for knowledge discovery in big data. So these are the programs which are coming up in the forthcoming week. And we have sent the invitations to our members as well as others in our group. And please do register and then get benefited. So I take once again this opportunity to thank Mr. Sridhar for his wonderful session. So thank you, Mr. Sridhar, again.
Thank you very much, sir. Thank you very much. Yeah.
Thank you all the participants for their cooperation in attending this program. And I am sure that they would have been benefited by this webinar. Thank you very much and good night.
Good night, sir. Good night. Thank you. Thank you. Bye-bye.
Thank you, sir.